The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials up 27. Nasdaq is down 16. S&Ps are off 2. Gold contract down 370, trading at $12.2370. Silver down 17 cents, $15.44. Metals, no bid whatsoever. Light sweet crude down 75 cents, $67.33. We'll get those API numbers this afternoon.
EIA, right?
EIA.
This morning. You got API was yesterday.
Oh, I could have done it last night.
Oh, I was figuring you were
What a
live
bummer.
there. Yeah,
That
they had
never
a little
happens.
action to the downside. We're trading about 77.15, I think, coming into those numbers. I just looked at it for the 10 o'clock update, actually, and so we're about 50, 60.
What day is today?
Today is Wednesday. Come on, Prince Spaghetti Day. You love it.
Prince Spaghetti.
We got a lot going on at
God,
TFNN. You're busy.
shame on me.
Tune in. Take a few moments.
Notes and bonds. Notes and bonds are tuned in, man. No matter what Powell says out there, bottom line, they won't back down. You get the 10-year note up one tick, 120.05. 30-year up 145.02. King dollar's up 231 ticks at 94.935. Now, King dollar, folks, if you take a look at King dollar, every time it's up at 95, there is a monster seller there. If you look at 8:30 this morning, we did have housing numbers come out, which were a disaster this morning at 8:30. But, man, they sold into that King dollar in a huge way. Euro's at 116.36 to one U.S. dollar. Yen is at 112.83 to one U.S. dollar. Let's go over to our man, Mr. Kevin Hinks, TD Ameritrade, Thinkorswim, folks. And if you haven't test-driven yet the platform, come over to our website at TFNN. You're going to see the banner on the top, on the side. Hit the banner, bring it up. They'll allow you to trade with paper money. And we have fast markets. We got a new show out here today. And you talk about, bottom line is that, we've been in the media a long period of time, right? If we've learned anything, people want ideas. They're going to do ideas on the run. Markets are open.
Real-world applications.
Real-world applications. Strategies inside the option market. Big deal. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. That's what we're going to try and do, Tom. We're going to try and, like today, we're going to talk, the stocks we're focusing on the first edition of Fast Market we're going to talk about crude oil. We're going to talk about IBM's earnings. We're going to talk about American Express earnings. We're going to try to fit in eBay if we have time. But there's so much discussion. We've got so much content to put in a one-hour show. It's going to be quick moving. We have a lot to talk about. We have Andy Swan on from Likefolio.com to talk about his purchase intent and how he uses social media to understand what are people thinking about stocks. Then we've got, for people who are technical analysis, we've got Ben Watson coming on to talk about Netflix and yesterday's activity and what that shows in Netflix. So we've got too much. Tom, I can't do it. I can't fit it all in.
It's going to be awesome, man. And you're going to feel like you're right back on the floor, man, with orders coming in fast and furious.
The pace is going to be something, but don't worry about me. I'll be fine.
Totally, man.
But, this is just what TD Ameritrade clients have been asking for.
Yes.
And that is a show, and we've divided them up into two shows. Scott Connor does a show that's more geared towards people just starting out, right, in the very basic fundamentals. We're doing a little intermediate to advanced traders and people who want real-time at a little faster pace. So something for everybody between 10 o'clock Chicago time and noon today.
Oh, that's beautiful. So that's how you're loading it up. That's really cool,
right,
man. It makes a huge difference. Because what does happen is that the aspect of even someone starting, they're going to pick up a lot of basically subliminally a lot of different ways that you can trade the market. Just listening to you and Tom too. That's
right. And Tom White and I,
yes,
to be perfectly honest, we don't see the same.
Right. No, I know. But guess what? We know that strategies are strategies, right? Yeah.
Exactly.
Right.
And so he has an opinion and I have an opinion, and rather than us, deciding on one, No, it's like picture traders sitting together at a breakfast table talking about trading.
Right.
That's what we're trying to do here. We used to do it every morning before we went to the floor, and those were raucous and lively, and that's what we're trying to replicate here.
Yeah, no, listen. Years ago, I was in John Nigerian's office quite a bit before that would start, man, and they were all about, of course, being delta neutral so they'd stay alive at the end of the day, Mercury trading, right? And
exactly.
I remember some of those conversations. And the thing that's cool, folks, is that it's not, sometimes people think people have biases. It's not biases. What it is, it's how they see the market. Do you know what I mean? That's what it really comes down to. And, you know, the reality is that, okay, where are you basically at the end of the day? And as long as you have a theory that, you know, basically is not going to blow you up, well, guess what? That's what markets are about, you know.
And that's exactly what we're going to do. We're going to stick to our three fundamentals, Tom, which is risk-defined trading, high probability trading, and focusing on positive decay, not negative decay.
Yeah, positive decay, man.
Right?
Totally where it's at. And of course,
account working for you.
yes. And, you know, we are in earnings season in a big way. I mean, from here, the next 10 days are going to be insane, you know? I mean,
Crazy.
yeah. And the only...
But it's my favorite time of the year, Tom. You know that.
There's no doubt, man.
That action in Netflix yesterday on the heels of the earnings is pretty remarkable.
That
right?
was something else,
Quite
man.
a turnaround.
And what did yesterday teach us? You look at what the FANG stocks did yesterday, Tom. It absorbed that bad news in Netflix, but people didn't get caught up selling the other FANG stocks, even though Netflix was having a rough day. They didn't sell the other ones.
No, and you know what?
Amazon, it's pretty interesting.
Oh, it's huge, man, and you know they sold them the night before. I mean, you know that's where you got to be careful, folks. Even after markets, when the liquidity's not as big. When Netflix did come out, all those FANGs got hit. But guess what?
Right.
Not when the market opened. You know, bottom line is that
Buying opportunities.
yeah, they were buying hand over fist, which is, you know, we're almost getting to the point. When I was working out with Nico this morning, you know, we were just talking the markets, and you know. It's almost like, man, are those stocks going to go up forever? And we know that that's not the case, but man,
right.
it's pretty close.
Scary to hear those conversations are taking place.
It is. No, it is scary.
Maybe it'll go up forever.
Doesn't it seem it? Yes, man. I agree, man. There's no doubt, man. Well, listen, we really look forward to the program. You know, congratulations. You know, this is right where you belong anyway. I mean, you and Tom, that's the reality. Do you know what I'm saying?
Right.
It's like, okay, man, you know, you've been doing this all your life. You know, when you're looking at markets, folks, you morph into this deal anyway. And I always tell people that the market's like Hotel California. If you get in, you better get some strategies together because you're never going to get out. that's just how they work.
It's like riding a wild tiger. I'd love to get off. I have no idea how.
Exactly.
Oh, boy.
I know.
Right?
You got to love it.
Totally.
You got to love it.
Yeah.
Right here, folks, another 45 minutes. We get the debut coming up, Fast Markets. I'm in Kevin Hinks, Tom White. Stay tuned, of course, right at TFNN. Kevin, you have a great one, a safe one. We look forward to the show.
Thanks for having me on, guys.
Thanks, man. Have
Thanks,
a great
Kevin.
one. Have a safe one. Dow's up 15, Nasdaq's down 20, S&Ps are off 2. What is the Nasdaq being down 20?
I don't know.
I don't know.
Give
Stay right there.
Give it some time.
Yeah, Tommy, exactly. Tommy and I coming right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is up 11. Nasdaq's down 28. S&Ps are down 3.5. So we're just talking with Kevin about that dollar index. So check this out, folks. Okay, this is pretty amazing watching this 95 area. So the 95 area and the dollar, it's been basically, trying to get over this area going all the way back to the big sign of strength it had on the 14th of June. Each and every time it's got up there, basically it's sold off. That 95 area now is the swing high from October of 2016, and it shouldn't be that hard to actually take it out because it only traded up there 2017 rather.
Yes.
It traded up there 3 weeks.
Yep.
That being said, watch what happened out here again this morning. It's pretty amazing.
Okay.
Now the housing number came out, which was a disaster. Okay.
Yeah.
Bottom line, look at that sell. It got up to 95,180,
yes.
and then bang, it comes out. Someone throws 1,400 contracts, just takes that thing south.
Right at 8:30. Yeah.
Yeah, right at 8:30.
Was that on the housing number?
That was on the housing number. But every time we've been up there, it always seems to be someone's selling it. They're selling that thing. So today's going to be another big day. Bottom line is that we've been up there 4 separate times, haven't been able to take it out. It hasn't helped gold at all, that's for sure.
No.
But,
bottom. Seems like you wake up and every day gold's $10 lower, right?
Every day.
I know.
Every day, man. Do you know what I mean? And, well, Bitcoin. Look at Bitcoin. XBT.
Yes.
Our man Jason Paff, he basically had this thing down really nice.
I was listening to, of course, we talked to him Monday. I listened to him on your show yesterday afternoon as well,
And, you talk about catching a bid yesterday. We went from 66.43 to 74.64.
Yeah. And it was pretty much in an instant.
It was. It was amazing, actually. Look at that.
Yeah. I mean, these are 10-minute bars we're looking at. So you got 10 minutes, 10 minutes, 10 minutes, boom, before you know it. Yeah. It must have been a fun hour if you were a Bitcoin trader and you were long, because I was sitting in here. So what time does this happen at? 1:30. So I think I was doing the 2 p.m. update.
Okay.
Say, what happened, man?
Yeah.
And I'm Googling the news, so I'm looking for the news on Bloomberg.
Yeah.
And then I'm looking for just Googling stuff, right, to see. Nothing out there, basically.
So picture, folks, it's up $1,000 in 3 days.
And you're talking about...
we're only on the 3rd day right now.
I mean, yeah. I mean, even going from where were we right here, because it's 67 to 75, so you're talking about maybe 750, is in 11, 12%. from yesterday at 2 in the afternoon. Pretty remarkable.
And, of course, what's going to happen now is that we'll see what kind of traction, we get, because the interest is going to go up again. Bottom line is that you got it moving again.
Sure.
So, oil. We got oil.
It is Wednesday, so we'll get the EIA numbers at 10:30 a.m. Eastern Time. It's about 10:21 right now. We got 9 minutes before those numbers come out. Here's the price of crude oil. We're on the Nadex platform looking at the active contract, September contract. Oil right now trading 66.69. To back this up, I took a peek at the API. Where is it? I believe this is going to be, yep, that is your 430 bar. So we were talking about, that was API last night. We're trading above $67. So we're just below that level, 66.70 we call it. And let's take a look at the type of volatility trades that we can set up here. Maybe looking at a trade on both sides, possibly, right? Looking for exposure for those inventory numbers coming up at 10:30. So what we want to look for is possible bullish spread and a bearish spread. That way we have a multi-leg trade. It's going to give us volatility on either side to claim value. And what's nice is, starting with the 11 a.m.s, oil right now, call it trading 66.70, right? And they have spreads that begin at 66.75. So what's nice here is that we could buy the bullish spread, which is going to be about 5 pennies out of the money.
Okay.
Would be selling the bearish spread, which is about 5 pennies in the money. So what's nice is you have to pay very little intrinsic value.
Exactly.
The only difference being is that you're going to pay, there's your $5 difference, which is there's your 5 pennies to the exact, 66.70 on the dot. And so we're just paying for 5 pennies of intrinsic value on the bearish side, but not bad. What are you looking at there? $41 for both sides of that trade, which would represent 41 cents away from 66.75.
It's not bad.
Becomes your break even. Now, this is 11 a.m. And that's always nice when the pivot points, I like to call them, line up right near where you are, right? So let's see where the noons line up. What's nice is they're going to line up identical. So the only thing that's different here is that we add an hour, right?
Right.
And what's nice there is that we really get to see exactly what that hour costs, because it's the only variable that changes for the trade.
Yes.
So again, here's your bearish trade. Now we've ticked down about a penny and a half, but instead of, what was it, 23, we're paying 25.
And that will go down 2 pennies.
And then instead of 18, it goes up 2.
No, that's right, because of the hour.
It's for the premium.
So 45.
Yep. 45 versus 41, the first one.
Still not bad.
No.
For an hour, it's not bad at all.
You're paying 2 pennies on either side.
Right.
Right? And you're paying it for the extra hour. So it's like you got to decide whether it's worth $45, which represents 45 cents over an hour and a half, or $41. That's, that's not much for an extra hour. And that's my bias, but it's really not. For that extra hour, with the inventory about to come out and with the type of volatility we've been seeing in oil over the last couple weeks. So jump into some of the dailies. They're going to line up a little bit differently. I just want to jump quick. That's the 8 till 2:30s. Maybe we would have $67 we could use. And the full dailies are going to have 67 too. So just give a final kind of like example of what you could do if you wanted. Now this is going to line up differently though. But 67 would be your point here. So you're going to have a little bit of a bearish bias. Let's say, you really think it's probably going to tank, but you just want exposure on both sides. You could be buying the bullish one. Now you're 30 cents out of the money. So you can see this one now only cost us 15 cents.
Yes.
Whereas the others were, what, 21 and 24 or whatever it was. And on the bearish side, though, it's going to be the expensive one, because that you're paying for 35 cents of intrinsic value.
It's not bad. You're paying 49 cents for 35 of intrinsic value.
Yeah,
if you're right.
$49 total, 35 of which is intrinsic value.
Right.
So as long as, if oil expires right where it is right now, you're going to get back that 35 cents of intrinsic value.
Right.
Versus the other trade that we were looking at, if oil expires right where it is right now, you're 5 cents away from your max loss. You only get $5 back.
Right.
So it is a different trade. This one would take on more of a bearish bias because 67 becomes your max loss, basically, as in the middle of both those spreads.
Yes.
But you could always just purchase one spread or the other. I mean, a bearish spread, that's not a bad trade when you're getting in. Basically, you're selling it at 66.50, so you're basically selling it 14 cents below market, right? Which is kind of what you're paying. You're paying that 14 cents, selling it below market. But what you get in that is that you get exposure down to 62, and you're capped in your losses at 67 with the inventory numbers due in literally 4 minutes.
And I believe it was last Wednesday when we had that big move.
I've lost track of the moves in oil. You're probably right.
First, it had moved higher because it was a big drawdown.
Was that?
And you know, and then all of a sudden it blew apart.
Okay.
You know, and that's what was actually amazing, you know, looking at that. So that's where they.
I was trying to jump to that.
I can bring up the Bloomberg.
Yeah, no, that's okay.
That's where the aspect, you know, was in the 230 move.
I know that I've just lost track of the Wednesdays because they've all been so big. That's all that's happened recently. So I'm like, I know that the last 2 or 3 weeks they've all had big moves. Just because oil, man. We were just at $74. We were just at, I think you're right. I think we got the 12 million barrel draw.
Yep.
Last Wednesday, oil spiked to $74,
exactly.
Right? And by the end of the day, it was at $70.
Good.
That's
Stay
nice
right there,
setup.
folks.
Perfect.
Tommy and I are going to be coming right back. We have the Dow Industrials right now up 33. Nasdaq is down 21. S&Ps are off 1.5. Gold down 440. Silver off 17 cents. And King Dollar's up 241 ticks. Come right back, folks. Those oil numbers. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We're rocking and rolling out here. So crude inventories rose 5.84 million barrels. Gasoline inventories fell 3.17.
For a quick reaction, right, the initial thrust, it spiked down to almost 66.30, 66.32. We're trading about 66.70, and from there we're jumping around a bit. But to bring that over, yeah, so headline number, inventories rising. the consensus was they were probably looking for a draw because the refineries are running really fast, right? That was last week's.
Yeah.
You had Bloomberg users expecting the stockpiles to fall 2.6.
Look at that. Ooh.
The median estimate's going to jump up here in a moment as well. That varies somewhat, but that's one indication you got to look at. And you have the inventories rising. We had a 12 million plus barrel draw last week. We have almost a 6 million barrel increase this week.
They're pumping it.
Yeah. And with those refineries running at almost like
98%.
Yeah, it was like 97, 98% last week. They still are building that type of oil. So pretty remarkable. Checking back 66.50. That is some volatility. Woof.
Whoa,
look at that bar.
It's going all over the place. If you happen to be just in your car or on the radio, so we get a move of what's that about?
Well, we're about 25 cents, 30 cents off the low. I mean, we went from 66.70 down to 66.32, spiked all the way back up to 66.30. 63. Now we're in the middle of that range, and it's been less than 2 minutes since we got those numbers. Right.
And what's going to be pretty cool here, folks, is that inside that volatility trade, we'll see where it shakes out. But what you did do is that you broke the consolidation that this market's been in for the last 2 or 3 hours. Meaning you broke lower.
Sure.
And
definitely.
that's a problem.
Definitely.
Technically that's a problem.
Yeah. And on the heels of the API last night, right, which sent oil a little bit lower.
Look at that chart right there.
Now have,
is that today's chart?
This is today's chart.
Ooh.
Yes.
That's nasty.
And to get into, so these are the top lines. So median estimate was even more of a decline than the Bloomberg users were looking for, a decline of 4.1 million.
That's quite a
So
move.
you're talking about a 10 million barrel miss. You know, you were looking for 4 million to draw, and you got about 6 to the upside. And Cushing crude down 860,000 barrels, PADD 3 crude plus 3 million barrels. That's probably a big part of the overall top line. Gas inventories, though, gasoline minus 3.1 million versus a decline of estimate of only 700. So some differences going on there compared to the crude.
That's a big difference.
Yeah. Just scanning for nothing too dramatic in terms of surprise, but yeah. And you have gasoline stocks dropping as well as the stockpiles falling more than expected. So one check back into the price. Let's see. Look at that. We're right back up there.
Baby.
That is a bar, man.
That almost looks like the Netflix bar from yesterday.
And that's where you really want to have, you want to have quick fingers. We talked about last week too when we saw the price. I mean, so here's the possible trades for noon, which we had looked at.
Yeah.
Those are going to cost us about $45 or 45 pennies away from it. And we basically got at least that far of a move right away on your bearish trade, which was the 66.75 down to 65.25, and you could have had a bid in there. You could have closed that out and then had this side, your bullish spread, remain active for till noon, which seems like an eternity now when you could have closed out your, and this is all in hindsight, but it's just the various ways you can trade it. Whereas maybe you said, you know what, even with that type of a number, I don't think oil is about to tank, right? There's no way. I don't see it. So you just see the huge thrust down. You get 50 cents in a minute. You say, you know what, I'm just taking that, and I'm going to look for a pop. We'll see what happens. That's quite a 5-minute bar. We're only 4 minutes into this 5-minute bar. Spiked all the way down, and we're now back right basically where we were.
The bulls and bears, folks, are fighting it out.
And I don't imagine we're going to stay there for the rest of the day.
I agree.
We'll see where we end up one way or the other.
Once you get volatility inside an instrument, it takes a bit to calm that thing down. And in this particular case, you get the yin and the yang in there. There's no doubt. Oof. Look at this. Oh my God! As we're talking, it just popped over the.
Pretty remarkable that we're gonna to
60. Look at this. Oh my God! Yeah,
quite a 5-minute bar.
66.80 right now.
Come on, get there to 67.
So we've just moved
70 cents.
70 cents basically in 2 minutes.
Almost there it is. There we go, 67.
Yeah.
Doesn't take long.
That's pretty cool.
It is. We'll check back in. So same thing, since it's, I didn't think that type of a situation is in. Now guess what? You could take some money off on the bullish side if you wanted to. We've popped so quick, right? Right now you could take money off the bullish side. You could take $24. You cut your exposure where you only have a $20 trade. Right. Yeah. And basically, then you're taking off half your position, and you'd be looking for it to plummet back down. But geez, that was a quick move, man.
Yeah, no doubt. Let's go see what these. I'm curious as to what the XLE is doing here. So we take a look at the XLE. Oh, let's see. This hasn't moved. The XLE. Well, it was lower, and it just did a little pop. So we went from 73.98. We just went up to 35 cents.
Yeah.
ExxonMobil. The thing that's so intriguing here is that they still can't catch a bid. You know, so Exxon's down 52 cents. Chevron's taking a hit. Look at this. So Chevron's going after the 29th of May. That low, 120.06. And it's going to have the volume. Now, this is going to be intriguing because we've done 7.2 million. We've already done 1.2 million. So this is going after basically a high volume swing low, and looks like it's going to have volume. It's definitely going to have volume, man. So this is going to be pretty wild watching this shake out as we move through this day out here.
All right, I got to check back one more time before. Look at that.
Whoa.
I was like, it's just two every 15 seconds, right? So boom. Okay.
See,
no more taking value off the top side as we're now back to
that's pretty cool,
almost,
man.
And as you can see, there's still premium priced into these because this has an hour and a half left.
Yep.
It's trading basically almost at your the max side of one floor, as in it would be the floor of this spread from 66.75 to 68.25. So there's still, as in, even if you closed out this position right now, this position as in you could sell that one and buy that one, and you're able to get $27 still off back in value because they each have value because you have that time, which is nice.
Right.
There wasn't you saw the premium get sucked out because we have the number,
right?
But there's still premium priced into that because you still have an hour and a half left, and that's where if you get spikes in one way or the other, man, pretty cool. All right, we'll check back in throughout the hour.
That is a big number.
It is.
Let's go take a look at some of the higher volume stocks and see what we have out here today. We did have Morgan Stanley come out with numbers this morning, and we'll get to that. In case, well, let's see. You get Morgan Stanley's up $1.23. Yeah. You get let's see, Marbell's up 4 cents. No big deal there. We got CSX come out with numbers. They were good numbers. That's a big railroad company. That was up $2.40. Netflix is down $5.50. United Continental.
Yeah, I saw they're doing well.
Yeah, so that's pretty wild. So
it is in contrast to some of the other airlines.
Well, what's really intriguing about that is that this is where, watch. If we look at the price of diesel, okay, which is airline fuel. So when you look at this, what you're looking at is that you're looking at the harbor, New York Harbor. Okay, so diesel right now is trading $2.04, and if they did well, let me pull this back. Let's see if it will trade the whole thing up. No, I guess no, it makes sense. I see that was last quarter, so diesel was higher this quarter coming up, but it's down from the highs. Diesel was $2.29. What is that? 2 months ago. Yeah. But you can see we were lower than that. So because it's all about diesel for airlines. Sure. Yeah. Stay right there, folks. Tommy and I are coming right back. We have the Dow up 20, Nasdaq's down 27, S&P's down 2.5. We're going to come back with Teddy Cakestack.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We have the Dow Industrials up 33. Nasdaq is down 22. S&Ps are down 1.5. You get oil moving around, still moving around pretty good. Let's go over to our man, Mr. Teddy Kagstack from Forex Trading Unlocked. Teddy, what's going on?
Good morning, guys. Good to be back with you.
Teddy, good to be with you as well.
Yeah, so, hey, listen, you know, we get these, there's no doubt, you know, the Forex markets have been moving. That dollar, well, the dollar index, okay, it's been driving into that 95, and it seems like every time we get up there, someone's nailing it. I know we're gonna start with the dollar yen. So talk to me about this dollar yen. We get your chart up here, Teddy.
Okay, great. Well, last week when we talked, remember I was saying if we get a close above 111 even, that would be significant for an upside move.
Yes.
Obviously, that definitely occurred, right?
Yeah.
Seriously.
Looking at the market above 112. I think that today's recent little new high, I think probably has hit some pretty strong resistance, and I'm looking for the dollar yen to actually fall back now. I think the pressure with the dollar is so strong, I think now it's time for a little profit taking to come into play over the next day and a half or so. So not anything like long-term. I'm not getting bearish the dollar by any means, but I think we'll definitely have a little adjustment. I think the yen probably is going to fall back to just below 112 even, probably around the 111.94.5 area where I have that target one on the chart.
Yes.
So that, I think, in the short run is probably really where it's going to go. I mean, gold is getting hammered right now. Oil is up off, what, $8 in just over 2 weeks, which I'm looking forward to because at least the gas pump's going to be a little...
Yeah, totally.
So, but that's a lot of, you have big money that's pulled out of two major markets, right? You have a lot of profit taking in crude from that bull run that's been going on for a very long time. Gold, that's just been in a free fall. I mean, that's like a lead weight being thrown into the water, right?
Yeah,
I mean,
April 14th to now, they sell it every day. Every single day. You know what's intriguing is that, you know, most times when the yen gets this weak, you can see the Nikkei get some strength, but the Nikkei hasn't been able to basically get over its swing highs from May or June.
Right. Yeah, I think that's pretty interesting how the Nikkei is not reacting like, I mean, the S&Ps are a completely different anomaly right now, the way they're functioning. But I think with Japan, you know, I mean, the trade war talk definitely was a little stifling, I think, for them over the past couple months. And
yes.
I think that's weighing on the Nikkei. And then there's also the dollar-yen trade right now, you know, with the dollar strength and the yen weakness. I think that's another thing that's been putting a little bit of a lag on the Nikkei as well, you know, especially with the expectations that I would think that especially on the Japanese front, that they're looking for these trends to kind of continue for the next like probably quarter, maybe even 2 quarters, you know, with the way things are going politically especially.
Yeah. Now the second chart we have is the dollar Bitcoin. What is talk to us about that?
Okay, well that, I mean, the rally that they had in the past week since we talked, it's like a balloon underwater. I think that one of the last things I said to you was like, I'm looking for it to touch down around 6,000 for Bitcoin, and it fell just a little short. It got under $6,100, and then all of a sudden, I don't know, there was a couple days, a little bit of a rally, and then the last 3 days have been crazy with the strength. I mean, from 63, basically $1,000 rally in the past day and a half.
Yeah.
You know what's wild is that Tommy and I have been talking about is that, so last Wednesday, bottom line, they come out with the oil numbers. You know, oil pops up for all of 30 minutes and then they take it south in a huge way. It seemed to come out of nowhere. Yesterday, bottom line, same with Bitcoin. Bitcoin goes down, bang, seems to come out of nowhere, boom. I mean, that thing took off like a rocket ship. And of course, once it got over 7,000, not that 7,000 means anything, but I think it got probably Bitcoin investors, you know, excited. I'd be excited if I was in that trade.
Totally. I was looking for news on Bitcoin,
Yeah.
like you're saying. I couldn't.
Right.
It was just trading higher. It was, yeah.
All right.
Sure.
So what do you see as the correlation, though, between Bitcoin and the U.S. dollar? Talk to me about that.
Well, I think that you have big money pools now, and now that you have all these derivatives that are involved with Bitcoin, you actually have dollars coming in from big pools of money now that are being allocated into Bitcoin. I mean, you have ETFs and private equity funds now that are investing in it. So I think that this part of this move could be generated by big money that's been moving. If you have, especially groups that have been long oil and they were long gold, they've obviously been scrambling to get out.
Yep.
If they're allocating cash.
Sure, I get the CME, the CBO, yeah, T. Okay, right, I got it. Right, yeah, yeah. It's got to go somewhere, right? The cash has to go somewhere.
Absolutely.
Yeah. So what else? The dollar in general. What are you looking at the dollar?
I think the dollar strength is going to remain. I mean, with the interest rate variable. I mean, right now the bonds are pretty quiet, and I think that they're quiet because of the big move that's going on in crude and gold. I think that the reason the interest rate futures are pretty quiet, or why would they move right now? You've got the dollar in play and all the other major markets. So there's obviously an interest rate play. That's why they're sleeping right now, you know.
Well, the thing that's interesting there, though, is that, you know, the Fed's going up on short-term rates, which they tell us every day. Powell said it yesterday. But the notes and bonds, I mean, well, it doesn't mean that they bottom, but you're talking about in May, they hit a low, and they're not pulling back.
Right, exactly. They're kind of like just going, they're kind of in a summertime market right now almost. It's weird, you know.
No,
so.
there's a divergence, I think, you know what I mean? Because most of the time, you know, it seems that if the dollar is this high and rate's going to continue to go high, they should be selling both of them, but yet they're not. So
Sure.
We'll see where it straightens out.
No, I hear
No doubt. So what do you think? Do you do some work on the euro? What do you think of with the euro?
The euro, that's another thing. I think right now, short term, it's kind of sideways. Today it bounced off some, I mean, the lows where it was going down to today was hitting some nice support on the daily support range.
Yes.
And it just doesn't seem to want to let go. There's no release. Like, it keeps dabbling with like trying to sell off, but there's just no pressure. It goes there and there's just no oomph to the
right.
slide.
Right.
You know? So I think that it is for the euro US dollar correlation. I think that the dollar is going to have a little bit of a tough time with that. I think with the yen, we get a short term maybe sell off, but otherwise I think it's going to remain strong. I think the dollar as a whole is going to remain strong for the next like month or two for sure. But the euro, it's like it tries to pound it and it just can't for some reason.
Yes.
You know. So and that's I think that's why it's a sideways trade. It's like I look at the euro and the bonds right now; they're kind of acting the same way. They're two major markets that should be moving because of these other markets, and they're just kind of just sitting on the sidelines.
Yeah, well, there's you know, when we look at that, and you know, currency markets, folks, are so much larger than equity markets. Of course, people are used to equity markets, Teddy, but it's pretty amazing when you look at the aspect of currency versus equities, right? I mean, it's just gigantic.
Currencies run the world, right?
They do.
You need currencies to trade equities.
They do.
Totally.
They do. Pretty amazing. And, you know, folks, you can come over to our website at TFNN, right under Nadex News. Teddy writes over there for Nadex. He has some great articles over there. His website is Forex Trading Unlocked. It's a beautiful thing. And, of course, currencies, as Tommy just said, rule the world right now.
You see some action, totally.
Well, listen, man, thank you so much. Appreciate it. You have a great week, safe week. We look forward to speaking to you next Wednesday.
Great. Thanks, guys.
Thanks, Teddy.
Thanks, Teddy.
Take care, man. Stay right there, folks. Tommy and I are coming right back. Our phone number is 877-927-6648. We'll let you know what that oil market's doing. Come right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
A Rubik's Cube offers more than 100 million starting positions, resulting in 43 billion potential twists and turns. Yet this puzzle can be solved in 20 moves. Hi, I'm Steve Rhodes, and knowing the right move makes all the difference in the world. And on Thursday, July 19th at 4:15 p.m., I'll share with you the 3 essential tools behind my #1 ranking by Timer Digest for the S&P 500. This 30-minute event is being hosted by Ninja Trader, and it's open to everyone in our listening audience. At this event, I'll share with you the Rhodes Momentum Indicator signal that subscribers now use to identify tops and bottoms, as well as Stevie's red line and the market profiles that I use. The sign-up link is on the homepage of TFNN.com and requires nothing more than your name and email address. To help celebrate my #1 market timing ranking, we're making Mastering Probability available to anyone in our listening audience for the next 30 days with a free money-back guarantee, whether you've subscribed in the past or not. Make your move now by coming to the homepage of TFNN.com and sign up for Thursday's workshop, as well as my free newsletter trial offer.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Learn how to trade options with swim lessons. Brought to you by TD Ameritrade Thinkorswim. Next on TFNN.
Welcome back, folks. Dow's up 27, Nasdaq's down 23, S&Ps are off 2. Market's kind of staying where it is. Oil
staying where it is too. What happened?
Totally.
So we're only about 10 pennies away from where we were prior to that news. We've had quite a roller coaster within the span of that 25 minutes since the 10:30 number.
Yes.
If you had made a volatility trade within 11 a.m. expiration,
right,
not what you would have wanted in terms of it being right next to that 66.75 expiration price point. If you had made the noons, you hope for a little bit of a roller coaster.
You get another 60 minutes, exactly.
Yeah, and we'll see what happens. But I would expect my personal bias for a little bit of volatility because there was a big miss there, and the market's just trying to figure out what it wants to do.
And you've had volatility thus far. It's just that it's flattened out right now.
Right.
No doubt. So let's go to poker.
So I think this might be the final poker update from the summer, and that they had the $1 million one drop, and you had Justin Bonomo, who was having himself quite a year for the ages in tournaments. He had already won multiple. I think I talked through it yesterday. Yeah. Big-time high rollers, and he won it last night for $10 million, and by winning that $10 million, he becomes the highest-grossing tournament poker player in the world, surpassing one Daniel Negreanu. He is now up, there's the number, not bad, $42.9 million in earnings.
And how old is he?
He's in his 30s. I'm not sure.
And young 30s. The other kid was 24 years old.
Fedor Holtz, who he went up against. Let's find his picture. There's Fedor Holtz, who was heads up. He is 24, I believe. He went on quite a heater in 2016, winning like $16 million at one point. So he's somewhere in like the top 10 of all-time winners himself. You got to be up there if you're playing $1 million poker.
And you know, in the finance business, David Ihorn, unfortunately, he was out number 6, right?
He was, yeah. So I think that's Greenlight Capital. He plays. He loves playing these super high rollers. He plays them all for charity.
Right.
And the cool thing, though, we talked about, this is Guy Liberté's charity one drop. So actually, they raised a lot of money in this tournament as is. You pay $1 million, and I think $111,000 goes right to charity. On top of that, so every player donates $100,000 basically to start.
Oh, I see.
There you go.
Stay right there, folks. We get fast markets coming up.
There we go.
Show. Have a great one. Have a safe one. Thanks, pal.
Thanks, Ben.
Go get him, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.